Retained earnings. An important term that appears in financial statements is retained earnings. Earnings is another word for net profit. Retained means held or kept. Retained earnings is net profit that remains in the company, as opposed to profit or earnings that are paid out to company shareholders. Some companies will pay out a portion of net profits to the company owners, the shareholders. This payout is called a dividend. When a dividend is paid, the net profits held or retained in the company are reduced. This means the retained earnings are reduced. Retained earnings are a running total of all the profits accumulated in a business. The income statement shows both the net profits of the current time period and the cumulative net profits or retained earnings from the entire history of the company. This table shows how retained earnings is a running total of the profits from past years and the current year. Let's take a look at year one. We had a net profit of $1,000, which means our retained earnings is $1,000. In year two, we generated another net profit of $2,000. So we add that to our retained earnings of $1,000, which gives us a total retained earnings of $3,000. Then in year three, we generated $1,500 in profit. Add that to the $3,000 and we have $4,500 in retained earnings. This example shows profits that stayed within the business. They were retained. Let's look at an example of how dividends paid out will reduce retained earnings. In year one, the business generates $1,000 in net profit and paid out no dividends. It did not share this profit with shareholders. So the retained earnings stays at $1,000. In year two, the business generated $2,000 in profit, but paid out $500 of that profit as dividends to shareholders. So we take the $1,000 from the previous year, add it to the $2,000 of year two for a total of $3,000, subtract the $500 that was paid out, which leaves us with $2,500 in retained earnings. In year three, we generate profit of $1,500. So let's add that to the $2,500 from the previous year for a total of $4,000. But $1,000 were paid out as dividends. So $4,000 minus $1,000 leaves us with $3,000 in retained earnings. Let's look at another example. In year one, we had net profit of $2,000 and paid out no dividends for retained earnings of $2,000. In year two, profit of $4,000, add that to the $2,000 from the previous year for $6,000 minus $1,000 in dividends leaves us with $5,000 in retained earnings. In year three, we generate another $3,000 in profit, add that to the $5,000 from the previous years for a total of $8,000, $2,000 paid out in dividends this year for a total retained earnings of $6,000. BusinessXP is the fastest and most inspiring training ever invented for future business leaders and entrepreneurs. Discover game-based experiential learning at business-xp.com.